Hello guys, fairbinaryoptions.com here. As you can see on your screen, US dollar Japanese yen 4-hour chart. Time to look for the downside. Whenever you are trading binary options like we do here and you want to look for the downside, the logical thing to do is to buy puts. So we want to buy puts based on this outcome. Now this is a 4-hour chart, but it is zoomed out a bit so that we can see as many candles as possible, because the analysis here is not that simple. It implies we are going to identify a top here, and this top is most likely, or was most likely, happening the other day with the highs in the FOMC, with the FOMC meeting. So let's try to see what this means. Basically, our first clue that something was wrong with this move to the upside started by the moment price advanced here with an almost equal move. If you take a trend line and measure the length of the first wave here, like this, and you clone it and you put it here, you see that they are almost the same. Whenever this happens in a 3 waves move and it makes a new high, what do you know? That is a contracting triangle. Well, if this is a contracting triangle and this is the first leg of a contracting triangle, let's try to label this one a wave A. And if this is a first leg of a contracting triangle, it implies that this triangle should break to the downside. So A, B, C, D, E, this one should break to the downside. From my point of view, the B wave should be done here with that double combination. Then a C wave should be to the upside with the zigzag. Then we are looking at a D wave to the downside here, and that would be our triangle. Any triangle travels between the A and C and B and D trend lines, and this one is no different. So basically, if you take a trend line and look for A and C, and of course B and D, you are seeing that this is our trend line. You might ask, okay, where is the E wave? Well, the entire E wave is another triangle of a lower degree. So this would be the E wave, should start from this moment and should go all the way to the upside, all the way on the right side here, and should be done with this move right here, right now. So A, B, C, D, E, and basically this is a triangle of a lower degree that should go like this: A, B, C, D, and E, and there you go. There is a contracting triangle of a lower degree. So let's change the color of this trend line, but again it is traveling between the A and C, and of course B and D. So A and C and B and D, and what do you know? The E wave is done. You might also ask, okay, if this is a contracting triangle that starts here and ends here, then and ends here, and is going to break to the downside, what would be the whole pattern? Well, the whole pattern is only a B wave out of a flat, and it implies of a bigger degree this is going to be a third wave here, then a fourth wave here, And now to look for a fifth wave to the downside, and this fifth wave to the downside should go like this. Now what to do in consequence? Well, in consequence, of course, that we are going to buy puts. So let's write here that we are buying puts, or buying put options, buying puts with end of day expiration date today, or end of week expiration date, meaning tomorrow. And that's pretty much it for the analysis today, as quite bearish on the US dollar and Japanese yen based on what Fed did the other day. So again, bearish outlook, bearish outcome, bearish expectations on the US dollar and Japanese yen. So basically from this moment on, looking for prices to go to the downside, ideally into the 94 area, but that's another story. We just need to have an expiration date for trading binary options, and for our price at expiration date to be bigger than the striking price. Our striking price is right here, right now, 98.24. Until next time, stay safe on the markets. Bye bye. This is fairbinaryoptions.com, and we are trading with Line Eye.